This is day 42 of breaking down the market so you don't have to guess. So let's look at price and see what the market is telling us. So right now we are looking at gold. So on the previous day we actually closed very bearish, strong as well too. Now as you can see here, we can see how price came back into this resistant level because on the previous day we can see how price had dropped down. Now if those who've been following, right, we wanted to see if this was actually a true sell-off, which is why we put this resistance, because last time we pushed up here into this level, we dropped down, right? Now, this is why it's important to have a trading plan. So as you can see, we were still above the 50-day moving average, and we were still bouncing from this overall support level while above 5,000, right? So the plan was, keyword, the plan was to see price push up and retest, not a prediction. It was to see if price could break above, if it could break above, because at the end of the day, our job is to not try to predict price. Our job is to let market structure tell us a story, because if price were to break above here and retest, then we could have been seeing gold continue to go up higher. But because from previous history did drop down, then as you can see how when it came back into here, it dropped down here again. Now, from a candle behavior standpoint, right, we did close bullish the previous week. So we're still in a zone where price can push up. What do I mean by that? Well, for those, if you've been studying candles, right, if the previous week or previous day closed bullish, right, just from a basic candle standpoint, on the next day or next week on the opening, you expect price to retrace down first before it continues to go back up in the original direction. Even if it open and push up first, you still want to wait to see price push down first, because that's just the basic anatomy of all candles. It always retrace down first before going up. Look at from a structure standpoint as well. Whenever price break out, right, you don't just buy the breakout all-time highs. You wait for it to retrace down to where it broke out of and embark. It's the same standpoint of a candle. All candles is it's just a simple way to help you identify structure. So that's all that is. So what I've learned is from the past, 6 years of my studies of price action, right, I've learned that price actually retrace at its candles, well, candles specifically retrace at a certain percentages before it decides to go back up higher. So I do trade based off the weekly candle, right, and use my weekly and daily as my overall bias and 4 as my entry, right. So since we did broke back below here, right, and we are to go up, right, from here we want to see price make a clear breaking structure off of this level. Well, what does that look like? Something like this. Our price is kind of here right now, and we kind of want to see price eventually start making some type of momentum that it wants to go up higher, and that's what we kind of want to look for. So that what that would look like on this type of level right here. We want to see something like this if it is to go up higher. Now we are back at a clear breaking structure right here, right? So this is at this point, this is when you wait, because it can continue to go back down lower. It won't, especially with it being below 5,000. So right now, this week definitely been a waiting week. Cause this week has been so far with gold. So this is just really observing and just watching, seeing what's going to happen next. Let's kind of watch out for yields and see what the yields is doing. And then we did close bearish the previous day, so that's a huge indicator. So price closed bearish the previous day, then use it the next day might be just price pushing up and then continue going lower. That goes back to that same concept. Just understand from a basic candle standpoint. It's just the opposite. So let's see what yields been doing. So yields actually been dropping. So that's actually good for gold because yields has actually been dropping. So we can see how it was an up momentum, but then we broke back below here. So if yields is going down, I'm always keep reminding y'all this. If yields is going down, that's actually strengthen gold, would make gold go up higher. If yields is going up, then that means gold is going down. The only way how this doesn't play into factor if there's something else that's major, like some type of crazy news that just happened, like some type of war or something going on, some or very high tension. But even then, like if it's high tension going on in the world, then usually that's actually benefit gold. So, you know, um, so let's hop into DXY, the US dollar, see what the US dollar is actually doing. So as you can see here, this all the US dollar has been doing, but you can see how we still came from here, pushed below here, so it hasn't moved too much. So it's still in the area where, hey, look, it can, actually, continue going lower, especially when it's not moving anywhere. So for those who don't understand why I always look at the US dollar index, because guess what? A weaker dollar, right, can mean a lot of things, A weaker dollar mean that could be a stronger euro. A weaker dollar could mean a stronger yen. A weaker dollar, so it has a lot of a weaker dollar actually benefit gold, so um, is why it's very key to look at U.S. dollar index as a leading indicator to help you understand certain conditions of the markets. And then let's look at UJ. See what UJ is on. This is the last pair we look at. And make sure you follow, like, subscribe for more daily breakdown. Like, comment. Help the algorithm out. Help these small content creators. So even UJ. So it goes back to, see what I'm saying? Because of DXY drop, right? That means UJ had a drop. So this whole week was a bearish week. And let me tell y'all this. I really trade only once a week. Let me tell you this. The main thing is not try to catch every single move. All you want to try to do is catch the main move for the week. Like, for example, let's say you know this was going to be a bearish week, right? As you can see, price ended up dropping. Your whole idea is try to catch the main move, of the week. Like, let's look at, let's see, gold, for example, right? Give you guys a sloppy example. I want to give you a good example. Here's just for a prime example. The previous week, right? Let's zoom into this right here. This is a perfect example of this. As you can see, right, price shot up and then came down. But let's say if you was bullish for that week, right? If you're bullish, you don't go for bearish setups. You just wait until you find a bullish setup, right? And let's say, okay, you caught this. This is the main move. That means that this is the main bullish setup of the week. All you're trying to do is catch a percentage. If you just try to aim for a simple, quick 1%, or between 1% and 2% per day, maybe even 0.60% per week. I mean, not per day, per week. That's good. If you can catch 1% per week, between 1 and 2% per week, that's good. That's about, like, what, on an average of 4% every single month. That's real good. So remember, the goal is try to catch the main move. You're not trying to catch the whole entire move. Just catch the main move. That's it. You do a whole lot better. I got my reason why I used to actually day trade, but I switched it to a swing trades because it's based on my trading style and my trading approach. I realized my trading style worked better from a weekly perspective, so that's why I kind of switched from a weekly perspective. But I said for another day. But other than that, I hope y'all enjoy this content. I hope y'all learning a lot and getting better. As always, make sure you have proper risk management. The whole game is about surviving long enough to win. It's not about avoiding losses. It's not about trying to catch the big plays. It's just surviving long enough to win. And if you can do that, as always, you can be profitable. So other than that, I will see you on the next market breakdown.